And today is November 11th, 2013. This is a quick update on 3D Systems, trades DDD on the New York Stock Exchange. And today the stock is up about 6%. It's up about $4 on and up to $74.90. And the stock is doing well as far as volume goes. Now, the reason we're doing an update on this is because this stock has performed extremely well over the last 18 months. You can see this chart going from lower left to upper right. I mean, it's an incredible chart. One of the best performing stocks, certainly over the last 3 years, if not all time. And this is just a wonderful stock in a wonderful sector. And I think the sector is just getting started. 3D printing sector. And they are one of the few 3D printing companies that caters to the retail segment of the market. Now, the reason we're talking about this stock is because we want you to watch it, because don't get sucked into the hype on the 3D. Even though I love 3D printing and I love the sector and I love what's going on, this is a very, very risky stock. It's breaking out. It's actually going parabolic. And we think it's breaking out through an upper channel line, and we'll show you what that looks like. So if we draw a line from here through this little channel here, notice how the last time it had an upper channel line breakout, it failed right there. See that? Now, if you draw another channel line here, okay, that's a much shallower channel line, and look at that. It is breaking above that channel line. Now, this is a little bit of art rather than science, and interpretation rather than law. But you know, there's some definite channel lines that this thing is about to either violate or is heading toward violating. So watch that. Don't be buying into the stock right now. It's way away from its 50-day moving average. It's 27% above that. It's 62% above its 200-day moving average. And the stock here is going parabolic. And what that means is that as soon as the selling comes in, there's a lot of buyers that have been buying over the last couple of 3 weeks. And now they're going to sell quickly because they want to lock in their profits, especially at the end of the year. So you're going to see potentially a big swoosh down. Let me show you what I'm talking about. If we go to Apple, one more thing. This is a late stage base. In other words, it started building bases here, back here at the stage 1 base after this golden cross here. So stage 1 base, then a stage 2 base, then it had a stage 3 base. Notice stage 3 bases and later tend to correct. So it had a correction. Then a 4th base, another correction, big one too. You had to really have some chutzpah to ride that one out. And then for another base on base pattern here. This isn't even in a 5th stage base yet. It could go to a 5th stage base, which makes it really risky. Okay, the later the stage base, the riskier the buy. Now, I know it gets exciting and that hits the news, but once you get sucked into that emotion, that's what these institutions want you to do, and then they're going to sell right into you as you're buying. Here's a stock called Apple. Apple over the last couple years has just been a lousy performer. But before that, if you just put your hand over the right side of the screen, let me do that for you here. And look at this. Wonderful lower left to upper right. Wow, look at that. So you had all these late stage bases starting right here. 3rd stage to a 4th stage, big correction. Another 4th stage, another correction. Another 5th stage, correction, right? And then a huge parabolic move. Huge parabolic move into a 5th stage, into a 6th stage, which is very rare. And when you had this correction, look at that, it's a 19% correction from the top to the bottom. But notice it looks kind of parabolic here. As soon as it started to break out here, you were in the risk area. And then it corrected again, big correction as we just talked about. And then it finally made an exhaustion move. This was its last possible move. And then after that, if you weren't getting out of this stock, you were feeling the pain. You were feeling the heat. Right? So you don't want to be in the stock during this period of time. And the best way to avoid being in the stock in this period of time is to buy right in the first place. So 3D Systems is one of those stocks that, while it's wonderful, you may want to just keep an eye on it and see if it's going to be doing this parabolic move. If you get something called railroad tracks, where you get these parallel lines and the little tick mark trading kind of on the downside, okay? If you start getting some of these railroad tracks happening up in here, it's time to sell and get out of your stock if you're long. And if you're short, I'm not going to say short this stock, because you could short this stock and go up another 15, 20 points, and that's painful. But If you want to do a day trade short, this is a good candidate for that, especially in a short market, in a red market. When these things take off, especially if they start to lose their volume up at the top, that's when things start to happen negatively on the downside. Happy trading.